Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from AWS reInvent in Las Vegas, Nevada. Joining me for this segment, we have James Tickner. He's the head of product over at Nasdaq IR Intelligence to discuss how Nasdaq is using AI to help companies reduce the complexities and resource burdens of sustainability and ESG research and reporting. James, it's great to meet with you. Welcome to Trade Talks.
Thank you, it's great to be here.
Let's talk about the evolving landscape in investor relations, legal, accounting, sustainability, how these teams are operating. What are some things that they are navigating right now?
Yeah, there's really one topic across all of those different groups that's really shifting in a pretty dynamic way. On the one hand, companies are dealing with increased demands from their stakeholders, whether they be customers, investors, employees, for more robust disclosure around sustainability and ESG, more firm commitments. On the other side, the regulatory picture is becoming increasingly complex for companies. Now, there has been some progress in 2023 in terms of standardization around regulation, but there's still some way to go. And for companies operating across a number of jurisdictions, there's a lot of complexity there.
How is Nasdaq helping companies with this?
Well, we've listened long and hard to our customers' challenges here. We're excited to say that we've developed a new ESG intelligence tool powered by AI. It's called Sustainable Lens. Leverages data and disclosures across 9,000 companies globally, and uses generative AI to really take out a lot of the manual work that companies are going through today when analyzing these kind of materials.
How can companies use this kind of technology to reduce the burden of reporting?
So there's a few use cases here, and I think three that we focus in on are, number one, we talked about the increased regulation. How do companies measure how aligned they are with the regulation that's here today and what's coming? Another thing is, how do they get an understanding of where they sit competitively, that sort of benchmarking aspect? And also just how do they keep up to date with the volume of news flow around sustainability that their competitors are putting out across the sector as well.
And of course AI, it's nothing new for us at Nasdaq. How long have you been deploying AI to help investor relations professionals?
Yeah. So I think for IR, obviously AI has been an important part of how IR Intelligence has helped companies for years and years, whether that be things like targeting algorithms to help them prioritize the investors they spend time with, whether it's generating insights on buying and selling activity in their stock, or if it's just anomaly detection, working in the back end to make sure that the data sets they rely on are clean, and reliable. Of course, with sustainability and ESG, the nature of that is such that it's very well suited for generative AI and all of the new technologies around large language models, because these are documents that are trapped on company websites. For a company going and doing this themselves, it's considerable legwork. The companies could spend days or days trying to find a single sentence to use as a best practice example, or if they're trying to do a large-scale benchmarking exercise, that could be days into weeks in terms of the time they're spending on that.
And Nasdaq recently published a State of Sustainability and ESG report. What are some of the main highlights from that?
Yeah, so we're really excited about this report. First and foremost, because we use Sustainable Lens to actually do the analysis for us, leveraging the AI there. And we used it to analyze over 45,000 documents, 7,000 companies. What we wanted to understand was, for a selection of regulatory standards that we looked at across the pending rules from the SEC, CSRD and others, we wanted to understand how far are companies away today and what is left to do. And so the interesting thing was, in the rules that we looked at, first thing to say is there's high alignment between these different regulations on the climate areas being very, very important. Interestingly, that's also the area where companies probably have the most work to do. So we saw under half of companies, around 44%, had sufficient disclosure in this area to be aligned with pending frameworks and rules. So there's clearly a lot to do there. On the social and the governance side, slightly different picture. So with governance, sort of around 2/3 of companies are in alignment there, and it's a little bit higher on the social metrics, around 3/4 of companies. Although some metrics, such as employee turnover rate, was one of the lowest disclosed across all companies. So the headline there really is, there's lots to do across all the areas, but really climate is a big focus for companies.
All right, James, appreciate the insight. Thanks for joining us on Trade Talks. And thanks for joining me from reInvent. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.